Garfield, I get the headline on the expansion and the 20%. What do we see under the index level in terms of the technicals and the fundamentals that informs us about the sustainability of this move?
Well, Yusuf, a key part of what's been going on here for quite some time is that the only fundamental that seems to matter for tech companies is what's going on with yields. And when they're low, the tech index does very well as a result. We had some concern. You look at last year, what happened last year? Yields went up, tech stocks went down. You look back during the pandemic when tech stocks did extremely well, that was when yields were kept low and money was flooded into the economy. It's even almost an ironic setup where there have been concerns raised about how treasuries are not as safe as a haven as they used to be, because look, SVB, they had a lot of treasuries, and that's part of what caused them so many problems on their balance sheet. So if treasuries aren't that safe, well, why not go into tech stocks, which A, seem to go in about the same direction anyway, and B, can offer you much greater returns when you do have gains. So if you've gone into treasuries beginning this year, you're doing okay. You went into tech, you're doing so much better. The other thing that is going on here is that even as yields have come down, that's because of concern about the economic outlook. The actual economic readings have stayed reasonably strong. So that's an encouragement for the corporate sector. And I would argue the other thing with the tech sector is they've been making a lot of job cuts. Now, those job cuts are touted by some as being a reason to worry about the economy. But if you're an investor, you're looking at it going, well, look, these guys are getting ahead of the game. This is part of why we like tech.